Good morning and welcome to Things Invest. How about investing, finance, and financial development? For today's video terms only, the investment top today will be Ethereum ETH. First, want to say good morning, good afternoon, or good evening, depending on where you are, and also happy Saturday to everybody. Hope you guys have a great weekend, by the way. With respect to Ethereum, over the course of 7:46 a.m. on the Eastern Time, currently traded at $3,080, up about 4.91% so far. In respect to the 15 consecutive surge days that we've been experiencing so far, on top of the yesterday's option expiry and the affectation that we've been getting stirred on the media affectation front, it seems like the bullish trends is definitely propelling, right? So, with respect to the technical analysis, I'm going to go through that more in depth to look at the risk profile at the current level right now to see what are the level to dollar cost average going forward, how should we risk control, and is it time to sell or should we be buying in? Like, how should we think about this going forward? So stay tuned, stick around, let's make some money. Moving on to the technical analysis for Ethereum taking ETH on records of 7:48 a.m. on the Eastern Time, currently like $3,079, up about 4.88% so far. And with respect to the chart, you could see that we've been on a rocket ship for quite some time now, ever since on the 20th of July, and we've been percolating ever since, right? And just to keep tabs on some of the key catalysts that's been driving this surge, right? And I would say this surge has been enduring for over 2 weeks now. So we've been basically having green buying pressures for the last, over 2 weeks now, ever since this golden cross that we've formed, right? And this was the timing of the B word summit, right? Ended on the 20th. And subsequent to that, we have a lot of positive news percolating from a lot of the investment banks that are offering to their private clients and institutional investors, on crypto assets, right? Or some sort of pseudo crypto assets like the Grayscale Trust, that is being used for Bitcoin and obviously for Ethereum Classic and Ethereum Basic as well, right? So obviously with those positive media affectation, subsequently propel up to go up there. And then we also had a lot of pseudo or adjacent positive news that was mixed into that bag of mixture that we've been percolating, right? And then with these red candles, this was mainly driven by the infrastructure bill's revisions and the new crypto bill that Don Byers is released, right? On basically putting some regulatory compliance structure, really listing things out on the crypto asset class to classify and also at the same times, put some specificity around with the tax implications, etc. and etc. So obviously with some regulatory constraints, it's definitely going to drive some selling pressure because it's it anti-correlates or it is a counterintuitive to the mantra of crypto assets, which is supposed to be decentralized, right? So obviously with regulatory pressure, it's a bad thing in the short term, but in the long term wise, it's definitely a positive thing because the feds are enforcing more pressure, putting more attention towards something that's meaningful. Means that crypto assets is something that it's going to be lasting for a while, right? It's a long-term value proposition, and that's why they need to step up to regulate before it blows out of proportion, right? So this is something that is logical, and I think we appreciate that because ultimately we are holding our hard-earned money into these assets, so we want to be thoughtful in terms of transparencies, compliance structure, and obviously just having security in place, right? And ever since then, we have a lot of percolations, and you could see these are mainly driven by the London fork. But after the London fork, we had a lot of weird activities coming from the whales, purchasing a relatively large volume. And despite the overall market value was relatively low, but it surged up a relatively short duration of time. Like just happened on, I believe, on Thursday or Friday, after the fork. At 9:30, we had this like mini green candle, and then at 10:10, we had that large green candle that came in, extremely large volume, right? And then subsequent to that, we had more of these buying in relatively large purchases. So it seems like they know something we don't know, right? Seems like they are striking the iron while it's hot with the London fork and also with a lot of media affectation that's been percolating, coming specifically, from some of the media outfronts, right? Like Decrypt, which has been extremely aggressive. I think Bitcoinist and also CoinDesk Even CNN, I've seen some news as well, and as of this morning, I haven't seen anything specific. It's mostly just regurgitating news talking about Ethereum obviously breaking 3,000. So taking a look at this chart right now is obviously very, very bullish. So I want to just show you guys something in comparisons, right? So does this chart look kind of comparable to what we're seeing right now? Like, let's take a look, right? So before we were at the bottom, the 1750, right, on 20th, which was basically like right here, right? We were at this belief at that point, and then we've been kind of hyping it ever since, right? We had the hope stage and optimism stage. We have the belief stage, and I think we are at the mid of the thrill and belief stage right now. I think in terms of like euphoria, I think we are kind of pushing it. Knowing the fact that we are, if you talk about like history repeating itself, that was obviously the peak of this, right? It looks exactly like it. If you look at the chart, this is just the chart that I pulled up. This is like a very rudimentary level of understanding market cycles, but how comparable is that if you look at the charts? It looks exactly the same, right? And right now, we are forming the exact same thing. You see that little dip that we had historically on the 7th of May. So technically, the risk level is extremely high, and but ultimately, is up to you based on your risk averse level, right? And I know I've been getting a lot of comments in this section below of the YouTube channel. There's been a lot of emotions in play, right? People arguing back and forth. I know there are people that are stepping up for me, but ultimately we are in the business of risk mitigations, and the levels that we identify for you guys is for you to risk mitigate, right? These are price levels that you use as a reference for you to gauge if that's the ideal level that I want to be buying at, right? And the technical analysis changes, right? Because the frames of resistance level shifts as the market dynamic goes, right? It would not be logical for me to keep that static because the market dynamic shifts and we have to keep that updated constantly, right? Ultimately, we are liquid, right? We are not just static in looking at one spectrum, and we don't ever look at things in a very binary perspective. Like it's either yes or either no, or it's like either black or white, right? We have to think in more of a holistic perspective, right? And based on what we see so far, MACD's very, very stretched up right now, and RSI is very, very hot right now, and it looks very similar to this chart that I keep mentioning. And I think we had that dip, right? We had that small dip if you look at that in comparisons. So I would say right now, we are at the thrill and the euphoria section. Okay, you see people like even like it's like such a funny picture, right? I'll buy more on margin. Got to tell everybody to buy. I'm a genius. We all gonna be rich. These are extremely emotional verbiage, right? And I can understand why. The comment sections that the verbiage that I've been getting, or the frustrations I've been getting is a byproduct of their emotions, right? You could just read between the lines, right? So please be kind to one another. These are emotional times, and I get it, and it takes practice to control your emotions and not chase the pump, right? But congratulations to all those people, right? That are long-term investor like myself, right? I know that there are a lot of folks that like to swing trade, but is swing trading something that can that's worked for you guys, knowing the fact that crypto is such a volatile asset class, and at the same time there's a lot of media manipulations in play. I think the safest bet, and this is what the reason why I don't ever just buy and sell on the same day or try to swing trade, right? Because it's such a volatile asset. But if you believe in a long-term value proposition and dollar cost average and the methodical level of the resistance levels again that we have identified, when we see the dip coming, that's how you know you can risk control, from there and continue to build up your position. My goal is ultimately get to 100 Ethereum, right? I currently have like 55 right now. So I'm just, continue to practice patience and allow the market cycle to go through its course, right? I could be up a lot right now, but if we like somehow jump to like 25,000 for no reason, yes, I will be selling because that's my price target, right? Again, 40% and then keep the rest in 60% to keep that going, right? Because I believe in the long-term value proposition, right? But right now it seems a little bit premature. It seems like history is kind of repeating itself. Again, comparable to the euphoria chart that we just saw. Um, Definitely, be careful. If you want to buy it now, fine. If you want to, that's your risk appetite. But just know that you have to be controlling your sanity and your emotions going forward, because as the risk is incurring higher and higher, the likelihood of you losing money in the same fashion that you did in the past is the probability is getting higher and higher as it goes up. That's just the way it is in the market cycle perspective. Just to recap on numbers and technical analysis, again, right, the current level that we try to attempt to break to is at 3,150, right? So if we get there, so that's a great sign that we're further consolidating, building some new concrete ground for us to stand on, which is ideal, right? But knowing the fact that, again, right, taking a look at this chart, we are basically around like the thrill and euphoria stage at the moment, right? So, and you see how sharp that the chart will be dropping, in the near future, that we need to be careful, right? I think the risk level is definitely surging. That ideally for me, again, right, these are resistance levels that will be breaking down to subsequent to the surge that we are seeing right now. It's 2,750, 2,450, 2,150, right? Obviously, it takes a lot of drag for us to get down to 2,150 or 2,450, but I would practice patience because, like, if you look at how it looks like historically, right, history is going to repeat itself. We saw that back in May already, so the likelihood of actually repeating history could be possible, right? But long term wise, it needs to go through that oscillation. It needs to go through that, pump and dump, if you may, if that's how you want to categorize it. But the long term wise, as it keeps going up, the escalator of the pump and dump is going to get increasingly higher. So that means that the next pump and dump is going to be higher level than the current pump and dump that we're seeing right now, right? And long term wise, with the corporate adoption, 20%, 9,800, and the next euphoric pump will get to the 9,800. At 3.6 times your money if you buy 2,750. Alright, so that's it for the respect my technical analysis on Ethereum. Take it ETH again. I know I'm talking about this like on a daily basis. I should be probably talking about other things, but again, try to control our emotions and stay sane. I know that the chart is screaming thrill and euphoria, and the verbiage that I've been reading in the comment sections are definitely reflecting emotions in play, and frustrations, and at the same time, um, just extreme happiness at the same time. I get it because you could be making a lot of money, or you could feel like you are fear of missing out. All of those feelings are not logical, right? And that's why applying the logics and applying the TA is such an important aspect of this job, right? Ultimately, we're in the business of risk mitigation. My job is not to tell you what to buy. My job is to tell you, hey, the risk level is increasing. What level should you be incurring more risk on, right? AKA dollar cost averaging, right? So hopefully this is helpful. If you like, or if there's any feedback that you'd like me to incorporate more, maybe simplify the analysis a little bit more, or however you would like. I don't know, right? So maybe I should explain things in a different perspective, or just let me know. I'm always open to changes. I'm learning from you guys just as much as you're learning from me. So it's a reciprocal relationship that we try to cultivate here, right? Again, we collectively try to help everybody. And it's interesting that people take my help as as I'm trying to hurt them or something. So I don't quite understand that analogy, but that shows like the negativity around greed and people's incentives around um, supporting you, but they only care about you because they think that you can make them money. But which is I understand that perspective, but it's interesting. That's all. But yeah. Anyways, really appreciate you guys for supporting and the continuous comments and the feedbacks I've been getting so far. But let's try to get better. And I'll try to get better for you guys as well. And yes, have a great rest of the weekend and stay tuned for this to come up. Take care. Bye.